you keyed up the fact that we have some more niche ETFs in there. Brian, let's dig into that.
Yeah, so there's dozens for investors to choose from. But as I was sifting through, 3 of them did catch my eye, and I thought that they could be worth mentioning on the show. So the first one that I thought was worth highlighting was called the ARKWeb X.O ETF, and the symbol there is ARKW. So this is a little bit different of an ETF because it is actively managed. So in this case, there is an investment manager that is calling the shots, picking individual stocks that are going into the fund. And the theme behind this fund is they're identifying stocks that are benefiting from the broad infrastructure shift away from hardware and software towards mobile and cloud. So this fund holds 30 different holdings. It's got a lot of full favorites that people I'm sure know, including NVIDIA, Tesla, Square, Twitter. And because it's actively managed, it is much more expensive than some of the other funds we mentioned. The expense ratio here is 0.75%, which is probably unappealing to many people. However, this fund has only been around for 5 years, and the shift away towards cloud and mobile has been so incredible. And this fund has a very foolish investing style that this fund is up 173% over the last 5 years, whereas the S&P 500 is only up 57%. So for people that are willing to take an active managed ETF, this I think is a great choice.
Yeah, and some of the characteristics that you point out with this ETF are really the signs of something that is actively managed. You know, you can look at some of them right off the bat. Smaller holding base, smaller AUM. It's a little bit easier to put up some pretty stellar returns when you're working with 500 million under management versus 19 billion. And you can be a little bit tighter in what you own if you're in the active space.
Yeah, and in this fund's case, the expense ratio that you're paying does give you a direct access to a theme that I think is very powerful, which is the shift towards mobile and cloud, but you are paying more for that focus.
Another major focus for tech investors over the last 5-10 years is cybersecurity. Shocker, we have an ETF for folks like that too, Brian.
Yeah, so this ETF has a super fun ticker, HACK, hack. This fund is called the ETF-MG Prime Cybersecurity ETF, and it tracks a equal weight index of companies that are involved in cybersecurity. So if you believe that cybersecurity is going to become an increasingly big issue and that there are companies that are focused on the space are increasingly going to grow in relevance, this is an interesting fund to choose from. They currently hold 55 different holdings, lots of companies like Splunk and Palo Alto Networks and Checkpoint Software. It's a bit of a bigger fund. It's got about 1.7 billion in assets under management. And like we said before, because of the niche focus, the expense ratio here is higher, 0.6% per year, which is a little bit higher. But the general trend towards cybersecurity has allowed this fund to outperform the S&P 500 by more than 20% since its inception in 2014. So you are paying more, but you are getting so far pretty good performance.
Yeah, and I'm sure a lot of people look at that have been interested in the cybersecurity space. I know for a while I was a shareholder of FireEye, a cybersecurity company, and unfortunately rode that wave down. This has put up pretty good returns in a time where that company has struggled quite a bit. That's because you have that nice broad exposure. You're not betting on one horse. You have a lot of players in that space.
Yeah, exactly. That's the big benefit of ETFs in general. They allow you to spread your money around, but you can still pick a theme that you like.
All right, Brian, this last ETF is one that we're kind of stealing from the Monday Financial Show, and it is a mobile payments ETF.
Yeah, I got a feeling that Jason Mosier would be very happy about this ETF. So this ETF is called the ETF-MG Prime Mobile Payments ETF. And it, again, has a really fun ticker, IPAY, I-P-A-Y. So this ETF tracks credit card companies and anything that's providing infrastructure that has anything to do with the payments and payment processing. So if you are into the war on cash, the theme that that cash is gradually going to continue losing relevance, this is an interesting fund to play it. This fund holds 33 different stocks. It's got about 400 million in assets under management, and it has outperformed the S&P 500 by 32% since its inception in 2015. The expense ratio here is 0.75%. Like it is for all of these niche ones. You are paying more for that for that concentration. But if you are a believer in the war on cash and you want a very easy way to play it, I think iPay is a decent choice.